Even the richest person in the world can make a bad, impulsive, and an emotional investment. Jedediah Collins here with the Money Vehicle Movement podcast, where we're trying to make financial literacy a little more current and possibly even a little cooler. Elon Musk, a name we have all heard. He is an entrepreneur and investor, and currently the richest person on planet Earth with a net worth of around $270 billion. That's almost $1 billion for every day of the year. He's the CEO of Tesla and SpaceX, and a couple of years ago, he purchased then Twitter for around $44 billion. He renamed Twitter to X, which can be arguably part of that decision going south, but he also took the company private, meaning it was no longer a publicly traded company and you can't buy stock in X anymore. Musk had problems with Twitter, its foundation, which is why he ultimately purchased the company. He didn't like Twitter's moderation policies, for one, which he thought was a form of stifling free speech. He raised the $44 billion because even though he's worth a lot of money, a lot of it is in the companies he owns and not sitting in cash. So he had to go find investors, friends, or banks to loan him the cash to purchase the company. And today he is the owner, at least part owner, of X. As it turns out, though, that may not have been his wisest investment. A new estimate from Fidelity, which also has a stake in X, has a recent valuation for X overall. Remember, Elon paid $44 billion for it just a few years ago, meaning that X at that time was worth around $44 billion. But Fidelity's estimate today, $9.4 billion. That's a markdown of roughly 79%. Now, as we speak this language of money, we understand this doesn't necessarily mean that Elon Musk has lost any money. You only make or lose money when you sell, and he is not selling at the moment. This also does not mean that X is, in fact, worth, quote unquote, only $9.5 billion. It's just an estimate of unrealized losses. Unrealized gain and losses are becoming more pertinent as it is a debate in the new presidential election. But Musk has attracted a lot of negative attention to X, and many of its users have left. It's also chased away some of its advertisers, which is the primary revenue generator for X as a platform. So if you count a lack of users and a lack of revenue, it's fair to say that the company has lost some value since he has taken ownership. There's a lesson in here for us non-billionaires. Not all investments will pan out. In fact, Musk probably made an emotional or irrational decision to buy Twitter in the first place. He was frustrated, angry even, or upset with the platform, and perhaps let those emotions get the best of him. Emotions are an investor's worst enemy. He also had the money to spend. He's worth $270 billion, and he thought, I can do all things and make all things great. So losing some on his investments probably isn't the end of the world, and I doubt he's going to see this video or check the headlines to say that X is even down that much. A question should be asked about why Musk invested into then Twitter. Why do you begin in the investment lane? He felt he could change the core of the company, including its name, for what he believed to be, quote unquote, the better. Perhaps this was not a financial decision, but more of an altruistic or social impact decision. Should you, as an investor, put your money into things that you believe will make the world a better place? Or, as an investor, do you want to focus on the fundamentals of an investment and the financials of its return? Think about your investments and how you will proceed to make more investments in the future. Are you going to make rash, emotional investments based on something you heard or something you saw? Are you going to dump a company the moment that they do something that you don't agree with? Do you make sure you're okay with the associated risks of an investment? And remember, your investment can always end up being a stinker. Finally, Are you trying to make a difference with your investment, or are you trying to make money? Impact investing is a newer and sensational opportunity for you to put your money where your mouth is. You believe in something, invest in it. That is what Elon Musk has done. He believed he could do something, and he got the money, lent it, borrowed it, raised it, however, and went and put his money behind it. If you are disconnecting your emotions and trying to act rationally with your investments, well, then you are speaking the language of money. If you are trying to change the world, you have to be prepared for the world to say, finances, those don't pencil out all the time. It's important to remember that Musk, again, has not lost any money yet, and X may be worth less than when he purchased it, but all of that is still unrealized until he decides to sell. The same is true for you and your gains and losses. Mistakes or wins are not realized until you decide to sell. None of us are billionaires. And if you are a billionaire watching this, please reach out. I'd love to talk. But Musk's foray into social media can be a useful learning tool. Remember to think about your risk tolerance and your risk capacity. Remember to do your homework before making an investment, and to clearly, not emotionally, think about what you're doing with your money. Am I in this to make an impact, or am I in this to make money? Not all our financial decisions will pan out, but by keeping a clear head, we make better decisions. Hopefully, that will give us a better chance of achieving our financial goals. Keep driving your money vehicle, and we'll see you at the next stop.